I'm very happy that you're all here. So I hope you're ready to learn, because this call is gonna be one of the longest calls I've ever been in during like my session, my trading session. So I'm gonna be firstly talking about introducing more like an introduction to Forex, what Forex basically is, how to trade Forex, then how to become a profitable trader, how to analyze. Then I'm gonna be sharing you different strategies I use when I'm analyzing and when I'm identifying trends. We're gonna be using price action and harmonics, just a little bit of harmonics because it won't be enough time. Then Elliott wave, we're gonna maybe touch it next time, because Elliott wave can be very tricky if you don't know a little basic about it. So harmonics is basically easy, it just shapes. So now I'm gonna be jumping into the graphs. So first of all, let me remove all of these drawings. So yeah, guys, I hope you have something to write, because I also do. So oh, I see already someone asking questions. It's fine. So yeah, we are recording this session, so you can like use it when you wanna revise or something. So jumping back to my screen. So guys, basically Forex is, I'm sure you know it, you read in the course. Forex is like more like a system or a market whereby, for example, is let's say, for example, for me to like explain it in full, I need to give example based on a certain pair, because someone may just say Forex is the largest what, so you won't basically get what the person is like meaning. So for you to like actually like understand it, the person must give you example about two different countries. So I'm gonna give a country, I'm gonna give example looking at for example, AUD, Australian dollar, versus the US dollar. We all know that the US dollar is stronger than the Australian dollar. So let me do a bit example about these two. Forex is basically when, for example, a person goes to another country, then if the person gets there, must change his or her money so that he can like use the base currency in that country. So we actually call it the base currency. You get what I mean? So, for example, if you're you're moving from Australia to US dollar, you see the rate here on your right hand side of your chart. Currently is at 0.69936, meaning $1 is actually 0, stuff like that. So all you need to know in the market, you don't have to know who's controlling the market, who's doing what and what. No, that's gonna actually like make you have too much information. Sometimes having too much information can lead you like getting some things wrong, because you're gonna be like always be ahead of things. You get what I'm saying? So first of all, I'm gonna be showing you how to analyze in the market. Meaning, if you need to be profitable, first of all, you need to know how to analyze. You get what I'm saying? So I'm gonna be jumping to that. So I use two strategies to analyze. The first strategy is called the horizontal support and resistance. Then the second one is the trend line strategy or trend line trading. Basically, we call it the trend line trading, but it's more like the trend line strategy. So I'm just gonna pick a pair like maybe which pair can I pick? Can just someone comment and tell me which pair can I start with? Just one person, it's fine. Which pair? Okay, yeah, GBP, JPY. Yeah, okay, let's get to it. Okay, DJ, okay, JPY. Oh, yes, this pair. Oh, let me delete everything which is here. Yeah. So, first of all, before I analyze this pair, let me give you a little brief of how to analyze, or how I am able to analyze. like I hear so many people like will say, how I do you manage to like get 100% accuracy each day, stuff like that. So I'm gonna be sharing you. They are not like secrets. They're just like simple things one trader can use to become more profitable. You get what I mean? So I already told you my strategy. Then number one strategy is the horizontal support and resistance. The second one is the trend line trading or trend line strategy. So when I analyze on a bigger time frame like 4 hour or day one. Then when I'm to like enter my trades, I'm gonna enter on 15 minutes, 30 minutes, or 1 hour. You get what I'm saying? The reason behind this is because entering on 4 hour, you're gonna be seeing small movement. Then like at least on the like 15, 30, and 1 hour, you're gonna be seeing a little movement. Then there's a reason why you will never see me trading on the 1 minute and the 5 minute. The reason is that for a person to trade on such time frames, you need to be very, very, very patient, focused, and you have like you have discipline, a lot of discipline, because patterns on smaller time frames like M1 and M5, which is 1 minute and 5 minute time frame, they change so quickly. You get what I mean? For example, you may see a double top, then after a few minutes, that pattern like is already gone. You get what I mean? So or sometimes it's not gone. It's like you can like see the way you were seeing it before. So everything on smaller time frame, they changes so fast. You get what I'm saying? So for you to even like trade on such time frame, at least trade on a bigger, at least analyze on a bigger time frame and know what's happening, know the overall movement. So then when I'm analyzing, I analyze on a bigger time frame. Then when I'm to like go in, I'm gonna go in on small time frame. So let's get to the analyzing part. Let me zoom out a little bit. Gonna be zooming out. Okay. I'm zooming out. Yeah, so yeah, it's fine like this. So I'm gonna be like firstly using our horizontal support and resistance strategy. So let me get to that. So I'm gonna be identifying our horizontal support and resistance, but only looking at the recent movement. You get what I'm saying? So I'm only gonna look at the recent movement. So maybe let me cut my graph here. It's fine. I'm just gonna be looking at the recent movement. Get what I mean? So the overall this pair has been like moving at the one spot on a bigger time frame, but if you like switch to smaller time frame, it's gonna be like a lot of momentum there. So I'm just gonna be highlighting my horizontal support and resistance. Then let's jump to the chart. So first of all, we have our support here, which looks more like a double bottom. Let me change the color. I like pink or purple. Yeah, it's gonna look something like this. Then we have another point here, which is more like it was a support for this trend, which was going down the downtrend. Then it became the resistance. So it's more like a significant zone. A significant zone is basically a zone whereby support turn into resistance and resistance turn into support. So that zone is basically, in short, very, very, very important. So moving on, I have also a zone here, which was more like a resistance. And if I can stretch it a little bit, is more like a significant zone also. Oh, let me pull it a little bit here. Remember, these zones don't have to be a line, no, because you're gonna like miss certain bars or candlesticks, because some of you don't know like bars. So candlesticks. So basically, they have to be like a zone. Get what I'm saying? So I have another zone here. Then I have my resistance, another resistance here, which is more like my highest point, looking at the recent movement. So once you have like everything here, all like identified, all you need to do, you can like also look at the recent movement and check out your support and resistance. So here, maybe I can like use lines, can use lines. Let me do this, then here, then here. It's fine like that. But I advise you to like use zones. You get what I'm saying? You can use zones so you can cover everything. Then moving along, once you have your zones here like this and ready, all you need to do is switch to the strategy number 2, which is the trend line trading or the trend line strategy. So now we're gonna be identifying our trend lines. You get what I'm saying? Or our trends. Then if we look at this movement from the left, this was a downtrend. You see this? This was actually a downtrend. Then we have let me actually like highlight it. This was a downtrend. This was a downtrend. The market was going down. Then it tried pushing by the trend line. Then it bounced to the downside for more like a double bottom or a W here. Then it shot to the upside. But when it was shooting to the upside, we were able to see something like this, which is an uptrend. It's a short uptrend, you see. Yeah, something like this. Then it broke to the downside. Remember, I usually tell people, for those I didn't have one-to-ones with, let me tell you this, write this down, is very important. For every breakout, there must be a retest. You get what I'm saying? For every breakout, there must be a retest. So you can see here, the market looked like this. It broke to the downside. Then we had a retest. Then it started going down. So this is our downtrend. I can now zoom in a little bit. This was our recent downtrend, which we are under even now. You can see this. This is nice. This is nice. This is nice. So these strategies actually help me to like see the market and like be able to like predict what may happen there and there. So it makes my analysis very like easy, and I'm able to like see the overviews when like you have like and I usually like tell people that when you're analyzing, the analyzing part must be like one of like the nicest things, more than like when you're placing your trades in, because you like you're communicating with the market. The market is trying to like tell you what or where it is gonna go. So you need to be able to like absorb all the information. So for me to put this trend line here is because if you like check, if you let me remove it a bit. If you can check, the market was giving like wicks at the same region. So this region whereby the market is like bouncing 3 times, we call it the 3 touches. It means the market like touched 3 times, but it wasn't unable to break. So usually when we get 3 touches, is most likely that the market won't break the zone, but shoot opposite to that zone. So meaning here we're gonna look for more like upward motions. You get what I mean? So, but there is also possibilities that the market can come back to this zone and break it, because we are on like weekends, and the market maybe they can be like new firing fundamental to like push these pair to the downside. You get what I mean? Because remember, technicals are like important, but without fundamentals, the structure of the market won't move. So meaning what I'm basically trying to tell you is that when placing your trade or analyzing the market, you should also know your fundamentals. So let me finish analyzing this part, then I'm gonna get to the fundamental part. So I highlighted our 3 targets here. So all you need to do after like you have your pair analyzed and everything ready to go, you can switch to a smaller time frame like 1 hour. Let me go to 1 hour. 1 hour. Let me go to 1 hour. Yeah, it's gonna look something like this. Something like this. These are 1 hour. So when you have something like this, that's where you can decide on like placing your trade. So usually when like you're trading something like this, which is like in between your trend lines, is like not at the trend line, I usually tell people to wait for breakout. For example, if this pair decides to like go up, all you have to do is wait for like it to like reach a certain zone. It can like break out, come to this zone. Remember, this zone is important because it was a previous resistance here. So it can reach to that zone, and you know what it can do? Can retest. Remember, for every breakout, there must be a retest. So it can retest to the trend line, not basically this zone, but to the trend line. Then from there, shoot to the upside. Get what I'm saying? Can shoot to the upside, to even this zone. You get what I mean? So that is actually the possibility of might happen. But if it breaks to the downside, if it breaks to the downside, so I don't advise to for any person to like trade the downside movement. You get what I mean? Because it's gonna be something like this. It can like get somewhere here, which is like small peeps there. Don't like small peeps. Can get somewhere. It can be something like this. Then from there, it can either decide to bounce. That's where, sorry, can decide to bounce here at the trend line. That's where maybe you can place a trade. But I'm not looking forward for the like the downside movement on GJ. I'm only looking for the buying opportunities, which I'm gonna be like preparing my trades on this pair during the London session. So yeah, so these are the possibilities of might happen. Then let me go back to the 4-hour time frame so I can like see the whole structure of the market. Yeah, this is like what is most likely to happen. Then deciding on how to trade this pair. This we can like put like on your chat on your notes. You can like say how to place my entries. Then under that header or topic, you can say, first of all, you need to calculate your lot size. Then that's where you can decide on splitting the lot sizes. Meaning if our calculated lot size was 0.75, or let me just say lot 1, but let me get to like, maybe if we say our lot size was 0.75, according to our position lot size calculator, we can decide on splitting the lot sizes or just going ahead like that. So what actually got into this game, and when like I started being profitable, it was when I was being consistent and using my proper risk management. Yeah, so before I actually jump into the market, I first of all I calculate my lot size. Then after that, I go about like putting my long position. I can put my long position here. Since I'm looking for buying opportunities, then that's where I'm gonna decide where to put my stop loss. Then all the time, if you like check most of my setups, I usually trade with 1:3 minimum. So meaning if I find good opportunities, I can trade with 1:3 risk ratio, or 1:7, or even 8, 9, 10, 11. But mostly 11 is more like my maximum. So I actually love 1:3 because it also like suits with my trading plan. So stretching this a bit, we can see our take profit is gonna be somewhere there. So this whole thing is gonna be 1:3. You get what I'm saying? So all you need to like do once you got your position like this, all you need to do is either decide on going about putting your whole lot size here, after the retest, putting your whole lot size here, or splitting your lot size. The reason I love splitting my lot size is that, for example, if I'm to like use the 0.75 as our calculated lot size, I'm gonna have I can put my first lot size 0.25 here. Then as the market like goes down a little bit, I can put another 0.25 here. Then I just like watch if the market is gonna keep on going down, or is gonna go to my stop loss. Then if it's next to my stop loss, I won't place another entry. You get what I mean? So it's so if the market kicks me out, I'm gonna lose more like the 75% of what I was supposed to have lost. So if I lose, for example, if I was to like lose $60 on the whole lot size, divided by 3 the lot sizes I divided, so meaning I'm gonna actually lose 5. Sorry, I'm gonna actually lose 20. Sorry about that. I'm actually gonna lose 20. Let's scratch this off. I'm actually gonna lose 20, and the reason behind that is that, number one, my lot size is I didn't like use the whole lot size. Then if you check the second lot size is not at the same position as the first one. Number three, all my lot sizes are not in. You get what I'm saying? So your most likely chances are losing 20 or $30. You get what I mean? So which is actually nice. You get what I mean? Which is actually nice. Because this game is all about making sure you have less you cut your losses and let good trades run. So always I make sure to cut my losses. I like, mostly I see traders whereby they are like greedy and they love like scaling in a lot of entries. That can be good if you have a nice setup, or the market is going against the market is going your way. That can be nice, but let me tell you something. If the market decides to like go against you, you're gonna lose a lot of money, and you may find out that is against your trading plan. You get what I'm saying? So if you're the type of trader whereby you like being greedy, or you like putting in a lot of positions, put them with relation to your trading plan. Or if you put them and they go against you, don't whine. Don't like be, why did the market come to me, stuff like that. I lost a lot of money. Because first of all, you went against your risk management. You get what I'm saying? First of all, you went against your risk management. So for me, this thing this thing I actually take it serious a lot. Because if I don't trade, I won't make money. I'm gonna stop. So if I risk more, there's like chances that maybe I may lose some money, and if I lose, I'm gonna like feel bad. So I always make sure I cut my losses and maximize my rewards. You get what I'm saying? So then let me before we move on to like another pair, analyzing another pair and talking more about price action, and me introducing you to harmonics. I'm just gonna go to the like questions and see if there's any people like asking me any question regarding this pair, my analysis, and my risking or risk management part. So let's see your questions, guys. Let's see your questions. I would like if Peter could go over this position sizing again. Okay, I'm gonna do that, buddy. How to scale in properly. I'm gonna do that. That's actually bro, how to flip accounts. That one is I'm gonna like talk about it maybe at the end of this session. So let me go back to how to scale in properly. Number one, when you scale, you need to first of all decide either you scaling according to your risk management or scaling as a risk, more like you're gambling. You're not trading, but you're gambling. You get what I mean? So you need to have this mentality when you're thinking about scaling. It's either you're gonna be scaling, risking a lot, which is more like gambling, or scaling properly. So this is how you can scale in properly. And you and this one is more like my personal strategy on how I scale in. So for example, right? For example, I'm taking this trade. For example, I'm taking this trade. So if I'm to like calculate my lot size and I find out my lot size is lot 1, then I calculate my position that if my lot 1 goes to my stop loss, how much money I'm gonna lose. So you may find that I'm gonna lose maybe, for example, around $100. So if sorry about that. So if I'm about to like lose $100, and which is a lot of money for me. I don't like losing such money. So this is what I can do. This is what I can do. I can like split my lot sizes. Maybe divide it into 4. I can like put my first lot 0.25 here. Then I put another one if the market is like going against me a little bit, as like it's going down somewhere here. I can put another one. Then you know what I will do? I'll just wait to see if the market is gonna hit my stop loss or is gonna bounce. So if the market decides to like bounce here, that's where I can scale in, knowing that I'm in profit. Get what I mean? I can scale in knowing that I'm in profit. Or you know what I can do? You know what I can do? Scaling in properly. Remember, scaling in properly. I can just wait for the market to go a little bit somewhere here. Then I'm gonna wait for a reversal. You get what I mean? If I get my reversal pattern, I'm gonna put more like a lot 1 here, meaning already I got lot 1.50 in, whereby my calculated lot size was lot 1. Then I got lot 0.50 in. So it's more like scaling in properly, because the distance from here to here, it won't be the distance from here to here. You get what I mean? So meaning is more like I'm scaling in with a tight stop loss. With a tight stop loss. So if this pair decide to like go to or shoot to the upside, then I'm gonna, first of all, I'm gonna like protect my biggest lot size. You get what I mean? I'm gonna protect my biggest lot size, meaning I'm gonna like move my stop loss in profit, or I just move it to like break even only on my biggest lot size, which was against my risk management. So that's actually scaling in properly. I intend to see so many people like putting in so many trades, like they are in a competition or something. So let me show you the disadvantages and the advantage of doing that. First of all, let's say for example you have a $300 account. So you like decide, you know what, I'm gonna put only one lot 0.10 in. Then your lot size is in, and you didn't use the rich split, and you have your stop loss in. So maybe if it's to like hit your stop losses, you're gonna lose about maybe $10. Or maybe let's make it interesting, and let's just say you're gonna lose around $50, right? So this is what can happen. If the market goes to your stop loss, you're gonna lose $50, meaning your credit is gonna, sorry, your capital is gonna capital balance, you're gonna be left with 250. So if you decide, you know what, I'm scaling in so hard, then the market, you know what, sometimes happens when you scale in so hard, the market can like go to your direction firstly. Then you're like already you're seeing more like 25% reward. Then you're like, wow, this is nice. Maybe you're seeing for example, you're making 50,
$50, and you're like, wow, that's nice. With this little movement, then it keeps on going your way. Then maybe there are like some events you don't know, or maybe your analysis were just bad. Then the market like drops your stop loss. You're gonna lose a lot of money because you're gonna pay for those unnecessary lot sizes you have put in. So you see how it works. So when you decide on scaling in, first of all, you need to like understand how to scale in, and you need to understand the concept of scaling in. It's either you're gonna be scaling in with relation to your risk management, your trading plan, or you're gonna just scaling by gambling or just trading like risking. You know what I mean? So moving on. I'm gonna be explaining more how you decide to put your stop loss. Yeah. Recently during our one-to-ones, I was like getting more people like asking me, how do you decide on putting your stop loss? For example, here, this trade, if I'm to like trade it, I'm gonna trade it after a breakout, then retest. Because when it comes to me entering a trade, I'm very strict. I don't care if it doesn't come to my pending order. Like for example, I can just put a buy limit. If it doesn't like break out and retest, I won't trade it. No, I won't trade it, because I'm very strict when it comes to me entering my trades. I'm very strict. I wait for all my confirmation. For confirmation of breakout is a breakout plus a retest. You get what I mean? So another point, for example, if like I'm trading this pair, then it decides, you know what, I'm breaking out. Then when like I noticed that this pair is out, it's like already late and there is no retest yet. Then like it keeps on moving. I may like have this mentality in mind that you know what, I'm late. Let me just put a lot size here, maybe to cut my position. No, I may have that mindset, but I won't get in, because that's what the brokers actually want. You get in late, and what they do, the retest causes the concept or the confirmation of trading surge. So you're gonna get a retest. So a retest is just gonna go against your emotions, because once you get a retest here, you're gonna like plan on like putting in or more lot sizes to cover the distance you were about to lose. You get what I'm saying? So you can see such decisions can lead to you being or trading against your what, your trading plan. So this is actually bad, and I don't like it. So what I can do, I can wait for it to break out, retest, I get in. And as for deciding my stop loss, trading such break and retest, I can like put my lot my stop loss inside. Get what I'm saying? I can put my lot size inside. So I'll know like definitely it's a breakout, it's a retest. So if it hits my stop loss while it's inside the recent trend or where it broke out, I'll just know, no, this was a fake out. You get what I mean? So this was a fake out. So I was able to like answer your questions regarding this. So now I'm gonna like move on to how to set up your trading plan, or let me just say how to set up your trades. You get what I mean? Let me just keep it simple, how to set up your trades, because trading plan is gonna lead to your target, daily target, weekly target. Yeah, let me just say how to set up your trades. So this is my schedule every day, guys. When I wake up and I'm preparing my trades, first of all, I'm gonna look at my fundamentals. So meaning I'm using the concept of trading in 3D or looking at the market in 3D. If you hear a person saying this word or concept, the person is actually meaning he's like looking at the market in the first D is fundamental dimension, the second D is the technical dimension, and the last dimension is the sentimental dimension. So first of all, let's get to the fundamental dimensions. For example, of what happened last year. What happened last year with all the GBP or the pound pairs? There was, I think it was last year. It was last year. There was elections in the UK. So most people didn't actually know there were like elections there, and most people were like selling these pairs. So this is something about fundamental. For fundamentals like election, this is how like to know where the market is likely to go. If you find that the like the president which is like running the country currently is the good president, and the one which is, he wants to be elected is the bad one. So basically, if the new one wins, the economy is gonna fall. All those pairs are gonna gap to the downside. So if you find out the like is the other way around, if you find out the good one wins, then all the pairs, they are gonna gap to the upside, meaning is something positive. That's what the people need. So going back to fundamentals, I use two apps to know my fundamentals. The first app is Forex Factory, but you can also use investing.com and other ones. I don't, but I know there are like so many fundamental apps or apps you can like know your fundamental events through. So all you need to do is make Google your closest friend and check those pairs. So moving on, I use Forex Factory for checking in my fundamental events. Then as for fundamental news, basically like the news of, like, for example, what's happening there, is there like strike or bank robbery in this country, there and there. So I use CNBC. That's the app I use. But you can also use any app you're comfortable with, but I use CNBC. So for example, on how fundamentals work, knowing your fundamentals. Let's say you're trying to like trade GBP JPY, which is GJ. Then you find out there's a bank robbery in Tokyo or in China or in Japan. You get what I'm saying? If there's a bank robbery in one of the biggest banks like the reserve banks, do you think all the Tokyo pairs or all the JPY pairs will actually go up? No, 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 they won't go up, because there was a bank robbery, which is bad for the economy. All the pairs will go down. So meaning you're gonna be looking at all the pairs which are against JPY to take advantage of the JPY crisis. You get what I mean? So that's how basically how the fundamentals work. They can give you a clue of what's gonna happen since there's this and that in the economy. Another example, if for example, our president, your president, let me just give example with Donald Trump. If Donald Trump decide to, you know what, I wanna drop tax a little bit, this is what can happen. I want, if like he decide on doing that, number one, the economy might go down a little bit, but the people are gonna be happy. You get what I mean? The people are gonna be happy, and the reserve bank is gonna be like maybe a bit in stress, but as long as the people are satisfied, you get what I mean? As long as the people are satisfied and the country as a whole is satisfied, so the economy is gonna go up. You get what I mean? So going, if the for example, this happened in the UK, in the like with the like British pound economy, so we can look for buying opportunities on the British pound, meaning the person who will be selling that person won't be alert of his or her fundamentals, and is gonna lose a lot of money. It's gonna actually lose a lot of money. Get what I mean? So That's how fundamentals help you. They help you to get the overviews of the market. You get what I mean? They help you get the overviews of the market. So moving on how the fundamentals help you. Let's say you're trading a certain pair and trading that pair, there's like fundamental events you don't know, like NFP and unemployment change. So what can happen is that, for example, let's say you're trading pairs like USD Canadian dollar or GBP USD, any pair against the US dollar. What can happen is that while you're trading that pair, maybe you're in good profits. You get what I mean? You may suddenly see the market turning against you. So if you know your fundamentals, before that happens, you're gonna be already out of the market, or already like took your profits. But if you're not aware of such events, you're gonna be in and not aware. So the market can either kick you out so bad or favor your direction. You get what I mean? So, but you need to actually know your fundamentals. So my daily schedule, when I wake up and prepare my trades, I look at my fundamentals first. Then once I know the overviews of what is happening in each country, I'll know which pair to like consider, or like which pairs today may like have a nice entries. For example, in the group, you like mostly you hear me saying, today let's look at the AUD pairs. Today let's look at the JPY. Today, something like that. That is because before I go to technicals, I've already know what's happening in different countries because I've read the news. You get what I mean? So as for how to trade the news, number one, you need to know that trading the news is very dangerous. You get what I mean? It's very dangerous. No matter what, it's very dangerous. So number two, that's like a big movement within a few minutes or seconds. So you can make a lot of money in few minutes and get out. So that's the good part. So getting in like the concept of how to trade the news, let me like remove all of this so I can like explain how to trade the news. Yeah, let me go to 15 minutes time frame. What you should know about trading the news is that you need to analyze. This one is opposite to your technicals. When preparing your fundamentals, right, which is fundamental trading, or just like trading the news, you need to like always analyze on smaller time frames. It can be 15 minutes time frame, 1 minute, or 5 minute time frame. So you see where the 1 minute and 5 minute time frame work best. So for example, if there is a news event at 15 minutes from now or 17 minutes from now, what you can do, you can like just check in this pair, like check the recent movement. So if you can see the recent movement, this pair was actually going down, was going to the downside. Get what I mean? So it was actually going to the downside. So remember, fundamentals always change the structure of the market. Usually when the pair was going in like smoothly, and like for example, if the pair was going up, the fundamentals are most likely to make sure that pair is gonna go down. You know what I mean? That's how they actually affect these pairs. So if that pair was going down, the fundamentals can make that pair to go up. Get what I mean? So, but there are certain clues we try to like check to like be able to know where those fundamentals are gonna go. I remember there was this other time, I'm not sure, I can't recall what was gonna happen or which fundamentals were gonna take place. And I remember telling you guys, this pair are actually gonna go up, and they did go up. So most of you were like, how did you know that? Are you a magician or something? No, this is how to analyze such. Number one, you need to look at your recent movement on smaller time frame. Unlike, it's actually opposite to what the technical analyzing. So our recent movement here is the market is going down. It was dropping. So then now you need to like try to spot certain pairs. Sorry, you need to like try to like spot certain patterns. So meaning here, I can't see something, I can't see anything properly, but let's try on like going to smaller time frame, like 15 minutes. Sorry, 5 minutes. So let me remove this. Then maybe let me put in horizontal line on the like recent movement. So yeah, it's gonna look something like this, So now the keys you can look, or the keys I look at patterns like a double top, double bottom, and a head and shoulder. Those are the patterns I look for 10 minutes before the news. So usually, you know what happens, guys. If I'm to like trade, for example, if we have GBP interest rate at 7, or sorry, this is my time, in 15 minutes time or 14 minutes time, this is what you can do. First of all, you're gonna look at the recent movement. So you have something like this. I'll just say downtrend, or the market going downwards. So what you can do, you can look for patterns like a W or a head and shoulder. So here I have more like a W, which is a double bottom. So it's more like this. You get what I mean? It's more like this. So you can see, looking at this, the market is most likely to like, if I'm to like treat the news, what can happen? The market like can go to the upside, and which is very nice, because it's gonna like make the pound economy to like go up. Get what I mean? So those are actually the possibilities. Then if the market it was like going up, then you can like check the like the recent movement. You see the market was going up, then you look for like certain patterns. If you can see patterns like the double top, double bottoms, my advice is get out of that pair, because it's gonna be giving you it's gonna be moving so strange. You get what I mean? But if it gives you the patterns I mentioned, it's gonna just go in smoothly, gives you the big bars. So you get what I mean? So if it was an uptrend during the news, exactly at that time, is most likely to go down. Remember, what I said, it's likely to go there. Not meaning it's gonna go there, it's most likely to go there. Remember, I've been using this strategy for over a year, so it was working for me, and I know it's gonna work for you. You get what I mean? So my advice is, don't use this strategy on a real account first. Practice it on a demo. Then once you're like comfortable with the strategy and you know how to like apply it, that's when you're gonna switch to a real account. So now I'm gonna actually give you guys 5 minutes to like ask me a few questions about fundamental trading. So let's see, guys. I'm waiting for the questions. Oh, number one, the first person is saying, Faye, would you like to ask it now? Oh, can you review patterns to look for 5 min before the news? Yes, you can do that as long as it's a smaller time frame. Remember, fundamental analyzing is opposite to technical analyzing. So yeah, you need to actually look at smaller time frame. Then I see another person saying about the break and retest needs to be a retest on the previous level, or could it be elsewhere? No, the retest must be at the trend line or the level it broke out from. So then another person say, what is the best fundamental news to be traded? Like CPI or GDP? No, guys, the CPI and GDP don't move that much. I advise you to use your apps, or like the ones I was actually talking about. Either you can use Forex Factory or investing.com. Then you filter out your events, whereby you're gonna be checking events with higher effects, which are gonna be events with the red color. Or if it's investing.com, you're gonna look for events with 3 balls. Got what I mean? So you need events can be number one, unemployment changes. Number two can be interest rates. Then the GDP and the CPIs, sometimes they can be in rate, but they don't move that much. Then there's core retail sales. They also don't move that much. But I love trading the interest rates and the unemployment changes. Then can you prejudge the market, where the market will go if this is? Yes, you can do that. That was actually what I was explaining right now. What are those patterns? Please repeat. So new trends is determined by roughly 3 touches. Okay, new trends. Then is there a major news coming out for a certain currency? So you said if you see a reversal pattern in 5 minutes and then before a major news, don't trade it. It confusing. This one I'll like answer it at the end. So guys, yeah, now let me answer all your questions in one. What I was saying, let me start with the question from the previous session on technical. So guys, when you see 3 touches, it doesn't mean it's the start of a new trend. It actually, what it means is that the market touched the same level 3 times. So it's not like most likely to like break that zone, because it was like testing that zone a lot of times. So it tested the zone 3 times. So it's not likely to break out, but go in a direction, in the opposite direction to that touch. You get what I mean? So as for looking at the news on 5 minutes, guys, first of all, what I can say, don't trade the news if you don't understand what or how they go. Don't trade the news if they like confuse you and you find them confusing. So what I can like tell you is that just know your events. Don't be surprised when you're like trading a certain pair, then the market goes against you. Then you start saying, no, it's a manipulation. No, the new it's not my day. No, it's because maybe you didn't know your news events. So then they went against you. Then sometimes they can like favor you. Because so it's the other way around. So it's sorry, it is most likely to go against you. So favoring you, it can be sometimes. You get what I mean? So back to the charts. Going back to like fundamental trading, you don't have to know how to trade the event. You just need to know that they are there, and how they can affect the market. Meaning a brief summary. You can write this down. if the economy was falling, then there is big news like interest rate and unemployment change. It's actually most likely that the economy can go up. I mean, that news is meant to like take the economy up. So if the economy was going up, the news can take the economy down. So you get what I mean? So the news actually like mostly it goes opposite to the recent trends. You get what I mean? If if for example there's like NFP, which is the American or the dollar unemployment change, is like coming in 5 minutes time, and the recent movement was going down. So if the market was going down and the news is coming, there's like high possibilities of the news making the like market to go up. And if the market was going up, the news can like make the market to go down. That's how the market can like behave. So let's jump to price action, guys. Price action. So I'm gonna take another pair. Maybe let me use gold. Let me use gold. I'm not sure if I was analyzing. Okay, let me delete these drawings and go to a bigger time frame. Then remember what I was saying, guys. When you analyze on a bigger time frame and you trade on a smaller time frame. So I can see a lot of messages coming in. So I'll get to those questions after explaining how price action works. Because if I'm like to answer all the questions, I'm gonna like spend the whole like session answering your question. Is just gonna be like one question after the other, one question after the other. So let's get to gold. Remember what I was saying, when you analyze, always analyze on a bigger time frame and enter your trades on a smaller time frame. So I use two strategies. The first one is the horizontal support and resistance. Then the second one is the trend line. So price action, you need to know your horizontal support and resistance. And in price action, they don't have to be the horizontal support and resistance, but they can just be the support and resistance. Either is at the trend line or not, or just horizontal, they are support and resistance. Let me show you what I mean. For example, looking at gold, let's look at gold. Let's just look at the recent movement. So getting on this pair, I just want to use only the trend line strategy. So I can like show you what it means when I say the horizontal support and resistance don't actually need to be horizontal at the horizontal each time. So I'm just gonna put my my trend line here and drag it down. It's gonna look something like this. Then I also like pull my other trend line down from here up until somewhere there. So now let me show you your levels. So first of all, what you need to know when the market is trending to the upside or up, we call it an uptrend, and when the market is trending down, we call it a downtrend. So let's get to this pattern or this trend. First of all, this was a break from a downtrend, meaning the start of an uptrend. Start here, meaning this is our HL, which is our a higher low. You get what I mean? Price action higher low. So then this is our second point where the market touched the trend. So this can be what? Our resistance at the trend line. So is what basically is our higher high. Betting dream, but I'm gonna try. So it's more like our higher high. Then the market formed what? A new higher low. Then from here it jumped to the upside, meaning this is also what? A resistance. But I'm going to get to the resistance part. Now I'm just gonna be talking about price action, higher high, higher low. Lower low, lower high. So since this is an uptrend, so we are dealing with higher high, higher low. So this was a new high, is H, which is higher high. You get what I mean? So then the market jumped back to higher low, then jump back to forming a new high, which is a higher high. Then jump back to forming a higher low. It's gonna look something like this. Then the market jumped to a new high, which is a new higher high. Then from there it jumped to a higher low. So now we don't have a new high yet, which can like happen somewhere here. So it is a higher high. This is a higher low. Higher low. So we don't have a new high yet. You get what I mean? We don't have a new high yet, but it can happen somewhere there. Pulling my trend, yeah, it can be somewhere there. Yeah, it can be somewhere there. Or let me just then yeah, it can be somewhere here. You get what I mean? So these are how you identify your support and resistance. They don't have to be horizontal each time, but they can be where? At the trend lines. First of all, our lowest region, let me use a different color for these, maybe red. First of all, our lowest region is gonna be what? Our support. So the highest region is gonna be where? Our resistance. Then we have our support, our resistance, then our support, our resistance. These are so ugly. Then our support, then our resistance, guys, then our support. So we are looking, maybe the market can form a new one, a resistance at the higher price. You get what I mean? At a higher price. So you see what I mean when I say it doesn't actually mean that each time when you're using the horizontal support and resistance, it means actually your resistance and support must be more like horizontal. They can be like this tilted, but all or what you need to know is that when we identify them more like horizontal. You get what I mean? More like horizontal. They are like something like this. They are horizontal. You get what I mean? They are horizontal. So that's why I actually love spotting them out horizontally and using the horizontal support and resistance strategy. So this trend is gonna look something like this. Remember, when you're analyzing, I like sometimes I hear a lot of people say, no, this analyze is like is ugly, or maybe it's there's like a lot of lines in the analysis. Guys, when you're analyzing, you need to be able to catch all the information. So catching all the information, there's no way you can be neat. You get what I mean? There's no way you can be neat, because you need to like be able to like and identify all the patterns inside. You get what I mean? All the movements. So looking at this recent movement, we can see that the market is still here at the previous high, which is our higher high. So what is most likely to happen is that either price can jump to a new high. Let me say here and move this thing here. is what is most likely is that price can jump to a new high, or it can go back to the trend. And once it gets here, the possibilities are that from here, it can shoot to the upside by going to the new price, or just simply break out. But remember, if it breaks out and you didn't actually, you were not able to like to catch the breakout. Remember, a breakout is when the new bar or new candlestick starts outside of the trend and it completes or closes outside. You get what I mean? It must closes outside of the trend or the trend line or the zone. So, but remember, for every breakout, there must be a retest. You get what I mean? For every breakout, there must be a retest. So here, what we actually meaning, so the market after a breakout is gonna retest to the trend line. It's not gonna get in. If it gets in, it means it was a fake breakout, but it must retest to the trend line. And from the trend line, what is gonna happen is that it's gonna shoot to the downside. You get what I mean? So, but if you are to like trade the breakout, you must wait for the market to like break out, retest, and shoot to the downside. I know a lot of you might ask me, why did you like indicate that the like why did you like think or like put those arrows there that it may like turn there here at this region? The reason I've like I showed like possible retracement here is that if you like check it, it was the previous what support in the resistance, sorry, in the trend line. It was the previous support in the trend line, meaning this zone is actually still can be able to like make the market to like bounce or respect the zone. You get what I mean? So if the market is to like break out, it's gonna break out to this zone, retest, then go down. That's after this retest, that's where you can like decide on getting in on this trade with your stop loss where inside the trend line. Inside the trend line, let me move this a little bit lower so I can be able to like pull the trend line. Meaning your stop loss is gonna be where inside the trend line. Then your first stop is gonna be somewhere here. Doesn't mean it's gonna be your take profit. No, it's just like more like a first stop where like the market can either bounce again or breaks and go to the downside. Then knowing your second level is gonna be where here, because it was a support from here. Let me put in this rectangle, so it's gonna be like here. So it can be here, making this trade a 1:2. Then another region can be here, making this trade now a 1:3. That's what I love trading with. Let me just put this thing here. I'll move this thing a little bit up. Something like this. You see, I actually love trading with a 1:3 because using this risk reward, I'm able to like hit my target and go out. So that's why I encourage most people that you need to have a trading plan whereby after you have hit your like your target, you go out. For example, you can like if you in your trading plan, you're like looking forward to like make maybe $200 a day. After you have made such money, you can like just go out of the market and like do other things. because you have already hit your target. What's the point of going against your trade plan? Because you can go against it. Sometimes you can like make more money, but you can like lose the money you have made that day. So which can lead to you like being greedy, because you'll want to like cover the loss and make more. You get what I mean? You're gonna be in a decision whereby you'll want to like cover the loss and make more, whereby you can like lose more, or maybe get the money back, but it's most likely that you can like lose more. So avoid doing such, guys. You need to be consistent and very patient. Consistent, but you need to be consistent and disciplined. Meaning, if you have a trade plan of, you know what, I wanna make $200 a day. After you have hit your target, go out. You get what I mean? Go out. So these are the possibilities of what if the market can break out a retest, you get in, then it's gonna shoot to the downside. Then let's see if it can break this zone or just come back down here. Then it gives more like reversal patterns. Question may be, how do you know your reversal patterns? Reversal patterns, guys, can't teach that right now, but I can like tell you to look at the Trading with Japanese Candlestick. This book called Trading with Japanese Candlestick. There's like reversal patterns in there. You need to know your like harami, your doji, your morning star, your hammer, your inverted hammer, your shooting stars, all those reversals, guys. So knowing that if the market can go somewhere, if it's to shoot up, it's gonna show you a reversal pattern. So if it shows you a nice reversal pattern, you can like enter here. So since you're entering inside the trend, what you can do, let me remove this. Let me remove this so you can see the screen properly. You can like put your stop loss where outside of the trend. So meaning you're trading inside the channel. Your entry is inside and your stop loss is where outside. Then as for your take profit, is gonna be where it's gonna be at your new high, which is gonna be your new resistance and your new what? Your new higher high. You know what I mean? So this trade is basically a 1:3, which is nice. You can make a lot of money and hit your target and get out. All you need to have is a good setup. You don't need more than 3, 4, 5, 6, 7, 8, 9, 10 no setups. No, guys, no. You don't need a lot of setups to accumulate money. But the advantages of having at least 2 to 3 setups is that if the first one fails or hit your stop loss, you can accumulate more capital or profits with the other setup. So that's the advantage. So, but the disadvantage is that what if all setup like goes into loss? Or another point is that people like overloading, or traders like overloading a lot. So if you lack discipline and you have a lot of setup, you can like try to like scaling a lot on all those pairs, which can cost you a lot. So I always trade few pairs. Maybe I can trade 1, 2, 3, maybe a 3, sometimes 2, sometimes 1. But I always love to like treat a setup whereby I'm sure of that is gonna go to my direction. And if I'm not sure, I'm just gonna, you know what, I'm just gonna leave the setup because I'm not sure. I'm very strict when it comes to me entering the market. So this is the possibility of the market can like maybe retest here a bit when the market opens, then shoot to the upside, or just break this region, or from even here, you can like enter, but you remember. So let me delete this. Let me remove. But remember, when you're entering, your stop loss is gonna be way outside of your trend, line. but then the take profit is gonna be at your new high. Get what I mean? It's gonna look something like this. You get what I mean? So it can actually be more like the same stop loss and the same take profit, just different levels where you've like entered your position. So that's how simply it is, guys, to like enter your trade. It's so simple, guys. It's so simple. It's so simple. All it needs is for you to have discipline. For most of you to lose money is because you lack discipline. Discipline, it also inside good a factor called patience. So you need to, when you have discipline, you need to also have patience. So you can like do other things while you're waiting for your like setup. You can like maybe read a book to increase more of your knowledge, or maybe you can, you know what you can do, right? You can like exercise, maybe play games while you're waiting for your perfect setup. And if maybe you're gonna be like busy, you can like set pending orders. You get what I mean? You can set pending orders. So what I'm basically saying is that, guys, you need to be strict when it comes to your entries. You get what I'm saying? You need to be strict. You get what I'm saying? You need to be very strict. Don't let the market pull you to where it wanna go, meaning the market is gonna be using you. No, don't let the market use you, but you use the market. Let the market come to you and you kill it. Don't go to the market. No, it's just gonna retest you and you're gonna lose your patience. So yeah, that's it on price action. Price action is very easy, guys. It's very easy. So now let's get to the point on how to spot your harmonics. But before I go there, I'm just gonna give you guys 5 minutes to like give to like throw questions. If you have, then we tackle the questions before we move to what before we move to how to spot harmonics. So let's see what you got, guys. There's a lot of messages already, so I don't know where to start. I'm gonna start with Adam B saying, do you put your stop loss outside the trend and below the previous higher low in this case? Yeah, you can do that as long as it's outside of the trend line. As long as it's outside of the trend line, and don't make it too tight, because you can like get wicks or stop hands which are gonna like kick you out quickly. So on which TF are you watching for those pairs? Which pairs? Then what is your number one confirmation for entering a trade and why? My number one confirmation for entering a trade and why. For me to enter a trade, I must get a nice setup. You get what I mean? I must get a nice setup. Then if I'm to enter, I don't actually go to like a smaller time frame and check what's possible, what is patterns I see there. No, with the current 4 hour time frame, I can like just enter where, as long as I've analyzed number one, I've got reversals like maybe I get a hammer on this trend line, so it's more like my confirmation. So I can also like deal with that. Then it can give me another brief to like, you know what, get in. So that's one of my confirmations. So maybe I can add a Fibonacci, but guys, you need to know something. A Fibonacci is not something which can tell you where is not actually a tool which can tell you where the market is gonna go. No, guys, the Fibonacci is just show you possible retracement levels, and where you like you can like expect the market to like turn and to like break like the 61 and like the 50. The 50, you know, the market can like rotate and turn to the opposite side, but sometimes it break like it did with US CAD last week. Then as for the 61.8 is actually the perfect entry point for for what the patterns like head and shoulder. You get what I mean? So it's the perfect zone like level to get as a confirmation for patterns like head and shoulder, because the 61.8 is gonna be below the neckline, so which is perfect. So GB this back same patterns, not pairs. Okay. On which TF are you watching for those pairs? Okay. Bro, what do you mean when you say TF? Or do you want to say TP? Okay, time frame. Thank you, bro. Thank you, bro. When I'm analyzing, bro, I analyze on a bigger time frame. Then when I'm to enter on a smaller time frame. I want you to understand something. When I say when I'm to enter, I enter on a time frame. It doesn't mean I'm gonna for example, I'm gonna like switch to 15 minutes, and first of all, sorry, let me put my screen like this. First of all, I'm gonna like switch here, and you see here is a double top, and that's one thing I said. If you want to like get a perfect entry, you can like go to the trend line. But even here, you can enter as long as your stop loss is way outside of the trend line. It's fine, but you need to like at least try to like be very strict sometimes with your entries, because that's what can help you to accumulate more money. But even what you're seeing here can be like rejected, and the market like when it opens start going something like this, can be a rejection. So back to GP's question, time frames I actually use, I'll say the 1 hour, because the 1 hour is more like it's bigger, but it's more like a lower time frame, because you can be able to see smaller patterns or candlesticks on that time frame, unlike on the 4 hour, since the 4 hour is the like the overall more like the higher time frame. So uh let me get to this one's question. Do you look at structure to the left for TP, or if no price action is nearby? Let's say for gold. Yeah, that's what I do. If I'm looking for a take profit, I'm gonna look for the previous resistance and support level. For example, let's go back to the 4 hour. Let's, for example, look at the 4 hour. Yeah, it's gonna look something like this. For my take profit, I'm gonna look at the left side. The left side is my higher high, my higher highs. So meaning, I'm just saying, I'm just gonna like predict, you know what, my take profit can be where the new high is gonna form. So meaning the new high can also form where, somewhere here. You get what I'm saying? Can also form somewhere there, somewhere here. So, but since you already you got your like TP locked, what you can do, if it gets to your take profit, you can, if you want, you can like remove your take profit and move your stop loss in deep profit, meaning you just trade stop and let this good trade run. So it's all about cutting your losses and letting good trades run. Maybe you can accumulate more money by this pair breaking this trend and moving at a higher pace or higher momentum to the upside. So this one is saying, do you use any indicator? Sometimes, yeah, I have this close friend. The indicator I use is more like my close friend, is the moving average with period 100. Let me add the indicator so you see what I mean. The indicator, it behaves more like my trend line. So sometimes you may like see whereby the like the market is bouncing on top of it. So style, let me try to make it maybe orange so you guys can like see it. So you see guys, you see how my moving average behaves. The market was bouncing on top of this moving average. So it's more like my trend line also. It's more like my support line. We get it. So I love the way it moves. And there might be some questions on how I managed to like get this moving average, like deciding on which time frame. Is that before I fell in love with scalping, I was more like a swing trader. I'll like hold pairs for more than a week. So I was using this strategy whereby you're using moving average. Let me like add them. I was like using moving average 50 for 50. Let me do it right. I was using moving average 50 and 200 and 100. So they look something like this. But you know what, guys? Let me like remove the drawings here so you can just see now how the moving averages like behave. So let me like do this settings inputs, put 50 and so you see how it behaves. So I'm gonna show you how to use this strategy. It's actually simple and I'm just gonna show you how. But remember, this strategy for I was using as a swinger. The for period here, I'll just say 200. As for deciding on the color, let me just take this color. Or maybe no, blue, bluish green. It's fine. So you see how this moving average are so smooth. So points to like note or like to check. For example, I was using this strategy as a confirmation of my new trends. For example, here it was a what? It was a downtrend. It was a downtrend. So if I'm to use this strategy, I'm gonna use it more like a confirmation of what's gonna happen. So this is a downtrend, right? Yeah, and in I like the way it's this breakout formed. You see how the market like. Let me use something to like draw. The market. Sorry, want something to draw. If you see here, the market broke out, but when it retested, it got in. I love this, guys. I love this. It retested, but when it broke out, but when it retested, it went in. So remember the breakout strategy is actually good, whereby you put your stop loss inside of the trend or where the zone it was at. But you see, the market can also like hunt you inside. And if you can look at this bars on this candlestick, you can see this is pure manipulation, guys. This is pure manipulation. So it went in and out so fast. You get what I mean? So if this is to happen, it's gonna kick your stop loss, right? It's gonna kick your stop loss. Then once it gets out, you can enter again with the same stop loss. So you get what I mean. So let me remove this. So see how this moving averages were working for me. Let's say I entered here, it kicked my stop loss, then I waited for the market to tell me if it's gonna continue to go up and or just go out. So then the market would have like went out, then I entered somewhere here outside of the trend line again with the same stop loss, then it started like shooting up. So while it's shooting up, I'll get my confirmation from my MAs. All of them, they crossed. When they like the 50 MAs on top of the 100 and 200, it's actually a sign that is what? The indication that it's a buy. And when the 200 is on top of all of them, is more like a strong sell. and even when the 100 MA is on top of the 50, it's just a sell. So you can see this was a what? It was a strong buy. So you can see you can hold this. If I was still using this strategy, I was gonna hold this until the what? The MAs crossed again. So meaning if I was using this strategy, I was gonna be still holding this, and maybe you see I could have accumulated a lot of a lot of pips here, but my overall I could have made 5.43%, which is nice. Which is nice, guys. So this is how this strategy works. It's more like the MA strategy for a swing trader. So you can use it if you want, but over time you're gonna see that being a swinger it's kind of hard. So you're gonna adjust to a scalper. But I like when you're firstly you become a swinger, then you become a scalping trader, because there's a lot of knowledge you can get from being a swinger, which you won't get from being a scalper. Number one is patience. All swing traders have patience, because we hold trades for more than a week. So that's patience. So being a scalping trader, there's no way you can teach yourself discipline firstly. So you see how sometimes to being a swinger, it can be an advantage, and then you can change your style from being a swinger to a scalp. So yeah, guys, let me remove this moving averages, then I remove everything, then I get to the introduction on harmonics, but I'm just gonna touch on few patterns under harmonics. So I'm just gonna use Euro USD. I remember was it last week or last of last week, I had a call, one-to-one call with it was Zoo, I think. Then I told him why this pair is gonna shoot up. That time it was somewhere here. It was somewhere here. Then I indicated, I remember indicating that it can form a head and shoulder somewhere here. But remember, to trade a head and shoulder, mostly we wait for the market to come to where? To here, somewhere here, which is more like our perfect entry zone. So putting a fib there, maybe you can see if we can get the 61.8. Let's see if we can get the 61.8. Let's see, where's the 61.8? Yeah. So you see what I mean? Let me zoom in a bit. Let me zoom. So you see what I mean about the 61.8? Somewhere here is the perfect entry zone for a head and shoulder. So which is nice. So let me remove this. So you see, those who thought maybe it will go down here, at least you thought maybe it can go there, but for entering, no, you could have waited for a perfect entry first. So I remember showing him how to spot a harmonic. Remember, before you spot a harmonic, you need to know your different types of harmonics. So you have your bullish butterfly, your bearish bird, your cipher, your cradle, your shark. There's a lot of patterns out there on harmonics, but the most important ones are your bullish butterfly, which is something like this. Some call it the mask man. Then we have a bearish butterfly. So it's more like a double top. Then this one is more like a double bottom. Yeah. Then we have more like a cipher, which is sometimes like this. You got what I mean? But you can see it's more like related to the bearish flag, just that sorry, the bearish bet. Just that if we check this leg, it's like stretched, is like more stretched a bit. You see what I mean? So yeah, this like patterns are more like related. So for you guys, since this is an introduction and I don't have like much time to like explain these patterns more, or how like to spot harmonics more, I'm just gonna be like now uh showing you basics on harmonics. So looking at this pair, we can see that at least we see one of these patterns. We see one of these patterns, this harmonic pattern. So I'm gonna use triangles to spot them. So you can see here, what do we see? This is more like the left wing. Then this is the lower part. Then this. We can see this is a harmonic, guys. This is a simple harmonic. You see, simple as that. That's how you spot harmonics. And you know what I love about harmonics, guys? They are straightforward. If you see something like this, for example, that time I remember when I was talking to Zoo, this thing was more like I was forced to put it here. And I remember telling him there's like more force to the upside. I remember telling him to look for buying opportunities to ride this to the upside. Because remember, for it to be a head and shoulder number two, the second point is that it needs to like break out of this uptrend. Can either put it here, and this can be more like a liquidity gap, or more like a week. So you can see here, it was more like this. So you can see I was seeing a lot of pressure to the upside, because this pair, it has a lot of pressure to the upside. So you can see now at the end it actually went up. So looking at this, guys, I still see a lot of pressure to the upside on this pair, but since the harmonic is still in play, but we can look for a short like short scalping positions. Remember, I'm not gonna be talking about the double bottoms, or I'm just gonna be strictly talking using the harmonic language, or using harmonic. So looking at this recent movement, I can see another harmonic somewhere here. You see, let me change the colors for, yeah. Then something like this can happen. So you see, guys, this is most likely to happen. So this the what? This the harmonic language. So there's like a lot of traders out there which like use softwares to like spot these patterns, but guys, what I can advise you is that there will never be a software system that is most powerful than the human eye. The human eye is powerful. So let me show you another. I can see another bullish butterfly here. So you can see there was no way the market would have like respected that trade. You see, guys, this is easy. This is easy, and I love the fact that when you're like doing harmonics, like the fact that when you're like doing harmonics, right? You are actually able to know, like, for example, if I see this pattern, I'll definitely know where the market is gonna go next. You get what I'm saying? So seeing the patterns, the harmonic patterns, you already know that where the market is gonna go. So now, if the market is to favor this pattern, it means actually we're gonna look for what? for the selling opportunity on this pair, and it's actually gonna be easy because if we were to sell, remember this can be more like the previous high. So if we are to sell on this pattern, we can put our short position somewhere here. Oh, I didn't click it. A short position somewhere here on this movement. Then remember, always put your stop loss outside the trend. So our trend here was an uptrend, but the reason I've put my stop loss here is because it's higher. Is I've managed to like put my stop loss behind my highest like region, whereby it's like outside of my highest point, which make this pattern to be my what, my bearish bed. So talking with the price action language is more like what, the double top. So then I'm to look forward to like take profit to where, at this trend line, this lower trend line. So you can see how simple it is to like also trade with a harmonic. This is the harmonic, guys. This is how you see harmonics. So I was only gonna like show you the basics. So let me just also like go to another pair and show you how to spot harmonics. Maybe use which pair can I use, guys? Which pair can I use first? Guys, talk to me. Which pair can I use? Which pair can I use? Okay, I'll go about deciding my own pair. I'm gonna use GBP, USD. Can remove this. Then first of all, here I can already see what a bullish butterfly. Is our butterfly. Then you see, guys, you see how you can like be able to like spot this. How you can be able to spot this? They're looking at the recent movement. I don't see any pattern yet, but I can see more like a bearish bed, but there's no confirmation on it. Looks something like this. Let me just use this region and then change this one to red. It's gonna look something like this. Oh, sorry, let me remove this. You see, guys, can be something like this. That's how simply it is to like spot your harmonics, guys. It's so simple. And between these two triangles, you see, there was a pattern inside. Let me use yellow. And then another one is here. So you see, that's how simply it is, guys, to spot a harmonic. But remember, before you spot them, you need to know them. So knowing them is not actually a problem. You need to actually know their shapes. The bullish butterfly, the bearish bed, and the cipher. Those are the important ones usually like put into consideration. So you see, when you have like highlighted your patterns, that's where now you can look for the opportunities. Remember, these patterns already, they can tell you where the market is going. For example, if you see a bullish butterfly, you can already know no, the market is gonna go up. Then after going up, it's gonna go away, gonna go down. So you get what I mean. So if you see a bullish bed, so you already know, you know what, the market is gonna go down. So another reason why I just love taking the bed, the cipher, or let me just say the bed and the butterfly in consideration a lot, is that the other ones like the cipher and the sharks, the cradle, is that they require a lot of knowledge, whereby you use like more like a fib to like know that if like the other wing is somewhere there, then the other wing is gonna be somewhere. Sorry, put my fib the other way around. So like no, if the other way is, sorry, if the top wing is there, then the bottom wing must be there, and the other wing must be at this region. So they require more knowledge. So I just prefer using the bullish butterfly and the bearish butterfly, and maybe add in on the cipher. You get? So you can see, guys, how it's so simple to spot these trends, or to spot these harmonics. So now I'm gonna wait for your what? Your questions. Let me see your questions on harmonics. I'm gonna give you 5 minutes to throw me some questions on harmonics. We go back to USD, Euro USD. So guys, I'm waiting for your questions regarding the harmonics. I'm not getting any questions. Oh, do you trade the building of the harmonics, or do you trade them after they were built? That's a good question. How do you, if there is change in the trend with, how do I what? How do you, if they, how do I know? Yeah, you might be trying to say, how do you know if there is a change in the trend with harmonics? Then harmonics on GBP, can you show? Okay, what are the win rates with this patterns? Okay, guys, the win rate. I also love this one. What are the win rates with these patterns? So let me start by like answering the first guy saying, do you trade the building of the harmonics, or do you trade them after they were built? So this is what happens with these patterns. If you're a harmonic trader, you are able to see the formation of this pattern before they even form. So meaning you like trade them before they form, and even after they are complete, you trade them. So meaning all we know is that all you know is that if you are to see a bullish bed, or sorry, a bullish butterfly, let me remove this so I can like get this one. You're gonna like spot it when it's something like this. Then meaning your overview is gonna look, you're gonna like be saying maybe it's gonna look something like this. Then you like trade it when it's like still down there, when it's like still somewhere here. You get what I mean? When it's like still somewhere here, then you just say it's gonna get there. So when you are a harmonic trader, you are able to see them before they even happen. You get what I'm saying? You are able to see them before they even happen. So you trade them before they happen. And even when they are done, if what we know, after a bullish butterfly is like it's like complete, you start trading against it. So its complete is gonna be like when the buy is complete, then trading against it, you're gonna start selling. So you see, you start selling. Then another question was, let me go back. It was, how do you know if there is change in the trend of with harmonics? That's the thing about harmonics. You'll see most people like they trade harmonics using softwares or robots, because they are a bit complicated, but they are easy. If you know them, you can like spot them. So how do you know if the trend is changing? So you need to like firstly mark your harmonic pattern, then put in the trend line to like manage it. For example, you have put your harmonic, then all you need to do is put in your trend line. So you can see here it was a downtrend, meaning it was responding to the harmonic. Then it broke to the downside, retest, then it can like go down. So that's how it is. So do I use crepes? I don't actually get into using crepes or cradles or sharks. I don't use them. Like I don't actually like use them because I find them complicated, because I need to like use them with a fib. You get what I'm saying? To like confirm them, use them with a fib. So you see, they require another tool to use them. So I just like prefer using a butterfly and a bat. So to actually make this more simple, I just prefer looking for a double bottom and a double top using the price action language. So what are the win rates? The win rates with these patterns? It goes with which kind of a strategy are you comfortable with? Because there are some people I know whereby they use this strategy and they like make profit every day. You get what I mean? So it's not about the win rate, it's all about which strategy are you suitable with or do you feel comfortable with. So, and then there are some whereby they have like traded with a price action a lot, and when they see harmonics, they don't get to like understand even a single bit. So then you want this one once D chase or TJs, once harmonics on GBP JPY. Okay, let me move to the pair GBP JPY. Let me move to the pair. Let's get to it. Oh, let me remove everything here. First of all, by just looking at this this trend, what do you see, guys? We see a bullish butterfly. Gonna look something like this. You see what I mean? It's gonna look something like this. These patterns make it easy, because even if you are like to use them looking at the previous movement, you see how it's actually easy to like spot them. Then you can like from here take this region, and it's gonna end somewhere here. It's not gonna be there, it's gonna end somewhere here. So you can see trading with this type of patterns is actually easy, guys. Actually easy. I don't wanna lie, it's actually easy. That's why there are like traders out there, they like use softwares to like they use the software or the robot to like spot this trend. Meaning if you can like see here, this is our harmonic bullish butterfly, like butterflies in. So but if I'm to like add more information or add more into this butterfly, I can see there was something happening here. Looking at this horizon movement, you see this. What can I say? I can say this wing is not complete. And I can say it can form something like this. Then let me then change the background color to something. You see, can be something like this. Not that it can like go that far, but at least there's like possibilities of it like going higher. More like So the reason I'm saying this, because you see here what happened. You see what happened here. This is more like the extra wing. It's more like the extra wing. So even here, it can be more like an extra wing. Can be something like this, but it's still a bullish butterfly. So you can see how easy these patterns can be if you know them. If you know them, but you get what I'm saying. You need to have at least some knowledge and experience with them. Then getting back to the questions. How do you know how far a harmonic is telling you the market will go in a certain direction? That's actually a nice question also. This is how you know. I love this question, guys. This is how you know. First of all, for me to like answer that question, I must remove all of this. Firstly, you need to do this. Let's start with this one here. Let's say it was something like this. Firstly, it was something like this. Then you were using a harmonic software, or let me just say a software, or let me just say a robot, but the robot is you, meaning you're actually monitoring this by your own. So the first day you can say it's somewhere here. You got what I'm saying? So it bounced back to where? To here. Then meaning you're gonna say it's something like this. You get what I'm saying? Something like this. Then the next day it's where? The next day the market is here. So now it starts to make sense. So once you see something like this, you have already like got it in your mind that, you know what, this is a bullish butterfly. So your first take profit, it must be at a level at least maybe at the same level to your left wing, which is gonna be here, must be your first take profit. Or what you can do is that after it reaches this level, you can like remember the strategy whereby you used to like try to grab more capital, whereby if the market has reached your TP, you can like remove the TP and place your what, your stop loss in profit, meaning you can like now put your stop loss in profit and let it run, let this good trade run. So the more it's going up, you can like put where they take profit at your what, your previous, your, sorry, you can put your stop loss at your previous take profit. You see, that's the thing about why I loved this strategy. I love this strategy because it can help you like capitalize more on your winning trade. So you see, then, but as for the TP part, first TP which must come to your mind is at your what? At your highest region from the left, which is more like your left wing. Remember, it doesn't matter where these wings at the bottoms are either not level or not, but the ones at the tops or the edges on the top, they are the ones which gives you more information about the TP. The lower ones, they're just there to give you information about the stop loss. You see why trading with harmonics, if you know them, they can be very, 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 very valuable. So meaning if I'm to like trade it, my stop loss is gonna be somewhere here, but my take profit is gonna be here. So you see, guys, these patterns are nice. I love them. I don't wanna lie, I love them. Then another example is here. For example, if I'm to decide a take profit on this trend, because you can see it didn't what? It didn't reach the same height as the left shoulder. Yes, I love that. This one is tricky. I love that. So remember what I said. The first take profit you must have in mind, it must be the same as the one in the left. So it's gonna look something like this. Meaning, if you are trading this patterns, your take profit, your first take profit in mind is gonna be here. Yes, it's true. It's gonna be here. You get what I'm saying? Then, if you have hit your target for the day, you can go out. You can go out. It's fine. You can go out. So, but if you're a swing trader and you use harmonics, your take profit is gonna be there. But remember, this doesn't mean is your take profit as in the only profit you got in mind. No, the market can go to higher regions, higher points. So remember what I said about this. You see here, even the butterfly can be something like this. You see, that's why I actually love harmonics. They are like interesting and they are nice. They are nice to learn. Get what I'm saying? They are nice to learn. So extending this butterfly is gonna be something like this. They are more like wings. You can say it has double wings also. It's fine. You can say it has double wings. So you see, basically these harmonics are actually double tops and double bottoms. Yeah, simple as that. In the price action language. You get what I mean? It's more like a different language. It's more like this is the market, right? It's more like this is the market. Then harmonic, price action, Elliott wave, they are different languages. So, what I can say is more like this is the market, right? The market is life. The market is life in general. Then the price action, the harmonics, the Elliott waves are the different languages we have in life. So, but we're actually meaning the same thing. You get what I'm saying? So a double bottom in the harmonic language is what is the bullish butterfly. Then double top in the harmonic language is the bearish bird. But in the price action language is more like what? It's more like saying the double bottom and the double top. Simple as that, guys. Simple as that. So I've answered your questions. So I've answered your questions. So now I see someone saying, this is a recent question, I think. Just wanted to confirm the butterfly on the screen right now. Is it bullish or bearish? It's bullish. You know why I say it's bullish? Because this is the region I was talking about. This region, maybe you didn't hear what I was saying. This region I was talking about this. You see what happened here? There's this thing in Elliott waves. There's this thing in the Elliott wave language that they say what happens on the left-hand side, it also happened on the right-hand side. So you see what happened on the left-hand side is most likely to happen on the right-hand side, meaning the market it can bounce here and shoot to the upside. You see? So for using Elliott wave, price action, and what? And also harmonic, we can say we're seeing a lot of pressure to the upside. So since this call is going to be recorded, I just want to see what will happen this week. I just want to see what will happen. This is very interesting, guys. I don't want to lie. This is very interesting. So yeah, guys, now let's get out of harmonics. I'm not going to be touching Elliott waves. For Elliott waves, I'm going to make a separate lesson on it, because Elliott wave, guys, is very tricky, and they are like certain weights we use in Elliott wave, unlike on harmonics and what and price action, whereby the weights may are impulse correction. You get this type of weights. So as for Elliott waves, I'm not gonna be touching on that. So this session was gonna be 2.5 hour. So it was gonna be 2 hours 30 minutes. So with the rest 26 minutes, I'm just gonna give you guys maybe 5 to 10 minutes to ask me questions. So I'll answer them after 10 minutes. So let's see, guys. Throw me some question. What do you want to learn more? I'm waiting for the questions, guys. Let me just ask them right away because I see a lot of you asking. I see you're using harmonics. Is it the best time frame to use? Yes. For harmonics, you can use any time frame. It's fine, but avoid using 1 minute and 5 minutes since patterns there change quickly. I just wanted to know about your entry on harmonics. Is the same as price action. You enter where you spot your pattern. Then as for your stop loss, is gonna be lower than the last edge or the last leg. And enter on the you said you analyze on a higher time frame and you enter. Yes, I analyze on a higher time frame and enter on a lower time frame. It doesn't change whether I am trading using harmonics, price action, or elot waves. Tell us ideas and tricks about backtesting. Okay, I'm gonna get to that. Then for what should I keep my eyes, or for what should I keep my eyes open when searching for trading opportunities? That's nice. What risk you think is good, or try to prevent risk of run? So let me ask let me like answer this once. Tell us ideas and tricks about backtesting. Okay, since this one is gonna like change to the topic, I'm gonna like show you guys on the last minutes. So opportunities to keep your eyes on when trading. First of all, like I said, you need to know your fundamentals. You need to know what's happening in the world. That's where you can look for buying or selling opportunities, or that's what you will know before going into your technicals. You need to know what's happening in the world. You get what I mean? The fundamentals have more effect on the market than the technicals, because remember, fundamentals are the one which is running the market. So what risk you think is good or trade to prevent risk of ruin? So what I can say about the risk reward is that I trade with 1:3. Mostly I can try to like maximize my capital by moving my take profit to make my trade a 1:4, 5, 6, 7. But remember, I said 11 is my maximum. So you get what I'm saying? It's all about making sure your stop loss is very tight, but you need to know where to put it. So that's why I say when you're trading like trades in a trend line, it's easier to put a stop loss because you can put it outside, and a little bit lower on on pairs which likes popping out liquidity gaps and stop hands. So back to general question: do you monitor charts for a long as you have a position, or do you check as an interval during the day? Thank you, bro. This is a nice question. Again, so guys, this is what I do. I'm a I'm a day trader, but I don't look at the charts the whole day. I trade automatical. As long as I have my stop loss and my take profit in, I don't think I should be like watching the market. What should I watching the market for? Because I have my stop loss and my take profit in. Maybe I can come after, for example, if I'm trading on 30 minutes, right? I'll just like maybe say after three new candlesticks on the 30 minutes time frame, I might be at least halfway to my take profit if my take profit was somewhere here. So you see, I may say maybe after 30 minutes candlesticks, I may be, or 30 minutes candlesticks, I may be in halfway to my take profit. So to know how many minutes how many minutes or hours to like come back and check your charts after. You're just gonna say, since I'm expecting 3 new candlesticks, 3 times 30 minutes, then it's more like 90 minutes. So it's more like I'll come back after 90 minutes, which is 1 hour 30 minutes. So yeah, I don't actually need to be on the screen the whole day, because remember, the being on the screen the whole day can lead to affecting your sight, your eyes. So that's why sometimes whereby you sit on the screen the whole day, you can like start to feel your eyes burning a bit, because yeah, the light of the screen is not friendly to your eyes. It's very harmful. So, but very clear. Okay, let me just say, maybe you're saying very clear everything. Ask when the stop loss hits your enter the transaction again. Not if I'm trading and my setup gets kicked out. I want to put it in this sense so you can like feel how will I react. Or if it gets kicked out, meaning I'm gonna be sad. If it gets kicked out, I'm gonna enter again. If maybe it was a manipulation, like maybe a week or a stop hunt, I'm gonna enter again. But if it was kicked out due to my analysis being wrong, no, I'm not gonna enter again. So it hits the stop loss again. No, I'm not gonna enter again. I'm only gonna enter again if they were manipulation, like weeks, stop hunts, or maybe there was just a retest. Get what I mean? Which like hit my stop loss and start going back to my direction. Yeah, there I can like enter again. So risk percentage, I mean of capital, not risk reward. So back to your question, what risk you think is good or trade do you prevent risk of ruin? Okay, risk of ruin. I just want to understand this risk of ruin. I don't actually understand what you mean, but let me try to maybe answer it. So, risk, you said risk percentage, I mean of, okay, okay. Oh, okay, now I get you, brother. Now I get you. So, this is what I do. So now we're getting into the part of risk management. So this is what I do. For any for not like, let me just say here, if I'm to like trade this, let me quickly analyze it. Where's my trade? Let me quickly analyze it. It's gonna look something like this. It's gonna look something like this. It's more like a breakout. So I can say it can retest, but it's still at the trend line. So I can like enter it here with my stop loss being inside. So, and my take profit in where I want it to be. So such questions, right? First of all, my overall risk appetite is gonna be calculated by TradeView for me, whereby you can see here, I'll be risking 0.06%. My take profit is gonna be on 0.30%. So as for risking per trade, I'll say, for example, if I'm aiming to get 3%, or let me just say, if I'm having a target of making 2% a day, I can like if, for example, I wanna make 2% a day of my initial account. So meaning I can make each trade to be at least 0.50. You get what I'm saying? My risk percentage can be 0.50. Remember, this type of risk percentages, you make them according to your trade plan. Meaning, the bigger you wanna risk on your entry, the more you can make money. But if it turns to your stop loss, is the more you're gonna lose money. So you see what I mean? The more you're gonna lose money. So for me, I don't calculate my percentage on one position or one entry, but on overall entries, meaning I'll know definitely with this lot size and this position, I'm gonna lose this much. And if it goes to my take profit, I'm gonna make this much. I like it that way overall. That's why I say, for me, I always make sure I keep my trading simple and straightforward. What do I mean by saying that? I avoid trading a lot of pairs and putting in a lot of entries. But no, what I do is that I can just split my calculated lot size into 2 or 3. 4 it's fine. 4 is maximum. Then I put in the lot sizes as splitted. Then I get in, or I can just divide my lot size into 2 and get in and let it run to my take profit. So the next question says, can you elaborate on the mode loose on 5-minute chart, price action 10 minutes before a news event, per reversal patterns? What other clues are there, like candle shapes, wicks, or yeah, candle shapes and wicks? Yeah. That's important also. Let me remove this. Yeah. Let me tell you something. 2 minutes before the news, there's gonna be a candlestick we called a stop hunt, a stop hunting candlestick. If you're inside trying to trade that news, what's happening is that that candlestick is trying to kick you out before the news. It's gonna be like hunting your stop loss. That's why mostly that candlestick tend to be a week, because it's gonna be moving something like this, gonna be moving something like this. It goes up. You see, it's more like looking for your stop loss. If your stop loss is closed 1 minute before the news, when the news is gonna go out, it's just gonna kick you, and then the news go to its direction. You see? Yeah. That candlestick, we call it the stop hunting candlestick. It's more like it's hunting your stop loss. So in terms of candlesticks to look at, what I can like tell you, you see like here, if they were like events. Sorry, let me switch to 15 minutes. It's fine. Let me like switch to 5 minutes. If, for example, I'm trading news here, you see there was a hammer before, so I'll know, you know what, the news must like seriously turn. So I can look forward for reversal here. So that's how my candlesticks actually work. You got what I mean? So you need to like look at the, for example, if you were looking at the 5 minutes time frame, you're gonna look at the like the current candlestick before the news. You get what I mean? You can look at the current candlestick before the news. Either where it's gonna close, or you know what you can do to be more accurate, you can look at the last 3 candlestick patterns before the news. They're gonna tell you a story of what's gonna happen. You know, when the market is turning to a certain direction, is actually telling you, you know what, I don't want to go there. You're forcing me. I don't want to go there. I want to turn. I don't want to go there. Like here, you see, the market was actually telling you, you know what, I don't want to go there. I don't want to sell. There was a first reversal here, but what did it do? It continued going up. It showed you another hammer here, and what did it do? It showed you more like inverted, went up, but for someone who was selling, it went up, then came down and won the person again. You know what? Still, I don't want to sell, so stop forcing me to sell. Then what did it do? It showed to the upside. You see, so before the market like it actually like goes to a certain direction, it tells you a story of either it wants to go or not. So those keys are what we call the candlestick patterns. So yeah, get to another questions. You said you do some elot waves as well. Could you please show for no this one it won't work. I don't wanna lie. This one, guys, it won't work. If like I show you a lot wave for 5 minutes, you won't understand what I'm meaning. But let me try. Let me try. Let me try. Let me go to 4 hour. On this pair, yeah, it's fine. So mostly when you use a lot of waves, you're likely to you're like required to know what to know how to use the trend line. Get what I mean? You're required to know how to use the trend line. So this is gonna be the bigger trend line. It's gonna look something like this. You get what I mean? So there is a lot of chapters and a lot wave. So looking at this pair, I can see you see a lot wave impulse wave. Let's use this one. We have 1, 2, 3, 4. Sorry, 3. We have 0, 1, 2, 3, 4. Then you see there's a lot of appetite way at the upside somewhere there. And this pair, guys, we use so many strategies. We use price action, and we were able to see there's a lot of momentum to the upside. And we use harmonics. We saw there's a lot of momentum to the upside. And now we use a lot of waves, and you can see there's still a lot of possibilities to like to the upside. So I don't want to get much on harmonics because I'm gonna be like talking about so many weights. Sorry, so many what can I say? So many biological terms in this chapter, and some of you don't even know what an elot is and who even wrote this concept. So I don't wanna talk much about this. For me to talk about this, I must make we must like I must firstly make what? Firstly make an introduction to it, get to how you use it, the rules of using it, because there's some people whereby they use this but they don't know the rules of using elot waves. You get what I mean? The first rule is more like elot actually says something about the market moves in zigzags. Market moves something like this. And he said something about what happens on the left will also happen on the right. So gonna expect something to be like this. So you see 1, 2, 3, 4, 5, 1, 2, 3, 4, 5. So guys, I don't wanna talk much about a lot because you're gonna also like asking me what is a lot wave. Yeah, let's not talk much about a lot waves. We're gonna like get to them another day. So yeah, I have a lot of information. I read a lot of books, guys. So I don't wanna like overload your mind and you're gonna be lost. But having a lot of knowledge is actually good because you can use different strategies to like analyze and improve your analysis. You get what I mean? You can use different strategies, so it's good. So we have 7 minutes left, guys. I was enjoying this session, but now it's coming to an end. But don't worry, you're gonna be getting more information. Maybe next week I can do it. But yeah, I really enjoyed our session. Maybe next week we can go about make going more. You know what we can do next week, right? We can like just talk about a lot. We can like just talk about a lot. A lot, I mean, not the wave, a lot wave. I can like start with the a lot guy. We talk about a lot first as an introduction. Then I talk about the a lot waves. You see, so it's gonna like make more sense. You get what I mean? It's gonna make more sense. It's gonna make more sense when you know who like started this strategy and how to use it and the rules and actually what it's all about and how it works. So it's actually gonna be nice. So now is like the end of our session, guys. I love you and I thank you a lot for like coming to this session, like being live with me. I hope you find this session very valuable, and I'm expecting you to be like sharing your result this week and showing me a lot of changes and a lot of blues, a lot of profits on your screen. You get what I'm saying, guys? I'm expecting you to be like making a lot of money. You don't have to like overstand your trading plan, but you can like plan a day to make maybe $50, $100 according to your capital. So it's all about cutting losses and letting good trades run. You hit your target, you're out in the market. You don't have to be looking at the charts the whole day. You can do other extra things like enjoying some family time, enjoying your games if you're more like a gaming person, going to the gym, meaning you're gonna be able to go to the gym some few minutes earlier, and you'll be able to maybe develop some new muscles. Get what I mean? So yeah, guys, I really appreciate this. So yeah, 5 minutes left, guys. Okay, let me just like read your messages. Okay, let's see. Some are reading a language I don't know. Salangas. I don't know what it means. Don't know what it means, guys. I don't know what it means. But maybe it means something to do with your grade, maybe, or maybe much love. So you're a beast, brother. Thank you. Cut losses. Oh yeah, guys. Guys, from 1 to 10. How do you rate this call? Oh, thank you guys. Thank you guys. Thank you guys. 11, even 15. Thank you guys. Thanks for your time. Okay, can you keep supplying this sweet analysis to as they are always fire. Guys, guys. But the thing is, I have a problem with our time zone. Our time zone, it differs. When I wake up, right? When I wake up, I trade the London session and the New York. So some you may find when I wake up, they are going to sleep. So I'm sorry, guys, about those ones. Maybe you know what I'm gonna try to do, since there's gonna be a new service whereby you're gonna be like trading with me live. I'm gonna try to like be live 24/5. I'll maybe sit on a chair while you're watching me, or maybe not even sleep at all. So yeah, then I see. Okay, we will talk now on Discord chat. Thank you, Peter. Thank you. Everyone, come to Discord channel for follow ups. Can I ask you one last question by Adam B? Pop, bro, pop. I wanna hear what you say. What, Adam? Let me continue reading this. So let's milk this broadcast. Yeah, bro, let's milk. Thank you, Peter. You are the king. Big thanks, Peter. Tons of info. I will be rewatching this video. Yes, bro. Yeah. Do you use impulse and corrective waves? This one will be more like a question for next week if we do more information about error wave. Yeah, I'll answer it next week. It's milking time, Peter. It was awesome to share your knowledge. Keep posting the daily analysis. God bless. Thank you, mate. Thank you, mate. Please do this again next week. Okay, I'll DM. Okay, bro. Okay, no problem. Every Sunday. Okay, enjoy your week. Thanks, Peter. Same time, same place. Thanks, Peter. Thanks, bro. Sunday is going to be okay. This is Zoo. From experience, do you think using a breakout retest strategy can be profitable? Yes, as long as you know where to put your stop loss, which is where inside the trend where it broke out. God bless all you guys. Okay. This is Zoo. Okay. Yeah. I can see Zoo is saying no losses allowed. Doesn't have to be like that. No losses allowed. It's more like you can say cutting your losses and letting good trades run, meaning making few losses but looking at the overall profits is more like enormous big profits. So yeah, guys, thank you for your time. Have a great night or have a great morning to those who is morning that side. or have a great day. Let's meet when the market opens for some analysis so we can kill the week. Bye, guys.